Personal Finance MasterClass, and it's always good to see you again. It's a bright day today, and we are very delighted to be on the fourth session. It's been a fantastic journey all through, and we are happy that we are now here on the fourth session, which marks the end of this particular Personal Finance MasterClass. Today's session is titled Real Estate Investing in Kenya. It is a session where we are going to be discussing, the fourth session, we're going to be discussing cash poor, asset rich. And of course, this is a very exciting topic, and I'm sure you are all eager to understand how is it to be cash poor, yet you're asset rich. And what are the options that can counter that, that are available, low-hanging fruits that are already available to you, and that is what we are going to be discussing today. As we come to the fourth session of this masterclass, we have had beautiful sessions, beginning from the first one, the introduction to basics of personal finance. And that particular session, we talked about budgeting. We looked at how to check and see where you are financially and what are the steps that you need to take. We went on to the second one, which was in Investing 101. We discussed the when, the where, the why, and the how. And we came up with great ideas on where to get started. Along the way on the third one, which was one we had previously, beginning with the end in mind was what we were discussing, planning towards your retirement and financial freedom. And I hope all of those who have joined us in all the three sessions have had quite an impressive sessions and informative sessions. And we want to welcome you back to this last session, the fourth session. We also want to welcome those who are coming in for the very first time. If you're joining for the very first time, we have been sending recordings. You can also email us the record to request for the recordings for the first, second, and third. And we will also want to assure you that even this fourth one will still be recorded, and we will share the recordings right after, perhaps after today. And so these sessions are powered by ICA Lion Asset Management, and I would like to go ahead and just tell you who ICA Lion Asset Management is. If I could get my screen up. So let's go to next slide, Ruth. Okay, thank you. Thank you. I want us to go by the slide so that we can all follow. So ICA Lion Asset Management is a company within the ICA Lion Group Holdings, which has 4 different companies: ICA Lion Asset Assurance, ICA Lion Life Assurance, ICA Lion Asset Management, ICA Lion General Insurance, and ICA Lion Trust Company Limited. Those are the 4 companies within the ICA Lion Group. We have some speakers today, and these 2 speakers have perhaps the largest or quite a good experience within the industry. Today's speakers, I will start with Barrack Obatsa, CFA, and for those who know the CFA qualification, what it is in our industry is probably one of the most prestigious qualifications one can have in this particular industry, and he has over 14 years within the industry. He's our Chief Investment Officer at ICA Lion Asset Management. We also have another expert, quite relevant for our topic today also, Ruth Okal. Ruth Okal is a property investment manager, taking care of the Ilam Fahari Reit with over 16 years industry experience. These are the 2 experts we have been very lucky to have this morning, and they will take us through this particular class, and we hope that we will learn a lot from them. A few things as we get started before I can call the speakers to begin. We will have a poll, and in the poll we will bring it up shortly, and we will also have a question and answer moment at the tail end. Please feel free to post your questions. Then we will have them answered at the tail end. Some of the questions will be answered as we carry on in the chat and in the question and answer tab. And then we will also have other questions responded to at the tail end of these presentations. So feel free, get started on the poll. As soon as you finish on answering those few questions, you can now minimize as we carry on with the topics. And without further ado, I would like to invite our first speaker of the day to take us through their presentation. So Barrack, you're starting.
Thank you very much, Sam. Quite an interesting topic for today. And real estate is quite topical, given that most of us in one way or the other have invested in real estate as part of our investment portfolio. Just to introduce the topic, basically, as we all know, real estate ownership is represented by a title in Kenya. And basically, it just reflects the rights that you have over the use of a building or land. Much of the real estate that we have, and globally, and so much in Kenya as well, is residential. However, if you buy, for example, to let rather than occupation, then it becomes a property investment in terms of an income-producing property investment. There are quite a number of other commercial real estate type of assets. One that we know obviously is the offices, the malls that we go through to every weekend or so often, warehouses that we see across the country, especially in this part of Nairobi, in Nairobi, industrial area on Mombasa Road. Then we have other specialized types of real estate, student accommodation, which has become quite big lately. Hotels, hospitals are also real estate investments, schools, and other manufacturing facilities. Next page. In terms of just to understand, so that we go into the topic even much better, real estate has some quite unique features compared to other type of investments. One is that real estate is normally it's indivisible, that it has an indivisible feature. Secondly, no real estate is the same as the next one you see. It has a fixed location. It doesn't move. You can't quite move it. And selling it takes quite a bit of time. So it's basically liquid. It's also subject to economic cycles. And in some cases, it also requires you to manage the property and basically spend on that. Of course, if you buy a plot, the operational management will be much less than a developed property. And it's also subject to government regulations, either county or central government regulations. And you buy it for quite a long time. It's not something that you buy and just sell the next day. Quite topical, asset rich and cash poor. This is something that a lot of Kenyans have been grappling with. One is basically that one can say is that we really have quite a lot of us, or quite a lot of Kenyans who are so rich. They have so much assets, but they don't have, they basically don't have cash, but they are quite rich. They are very wealthy in property, but they cannot meet some of the cash needs that they require. So one can say, I mean, real estate is basically one of just the available investment options that one can go into. I will say, I know in Kenya, sometimes we've been doing it sometimes in a fad-like manner. So people are buying, so I buy. For us, we say it requires a bit of thought before you buy. And one of the things is that we're not saying real estate is bad. I mean, you can make money in real estate. Just do it with a plan, because as you've seen in the last 2-3 years, people have lost money in real estate. You buy a plot today, next year it is less by 10% or 20% or even more. As the COVID pandemic has basically shown us that real estate does not necessarily maintain its value. It can also go down, and COVID has been a very good, basically an example of how this can happen. Now, the most important thing in any investment program is for one to have a very balanced portfolio, where you can have some element of cash in that portfolio, so that you, when I talk about a balanced portfolio, of course, any portfolio depends on your circumstances, your personal circumstances in life. When we construct a portfolio and I advise you to construct a portfolio, we look at your personal circumstances. But one, as a rule of thumb, you need to have some good element of cash to meet some emergencies, like paying school fees. I mean, we have had 5 times this year, paying medical bills especially. And it has been quite prominent this year, especially in the environment that we've had, where people have had a lot of challenges, especially health challenges, and we've seen people run huge bills. Yes, they have all this property, they have their houses, they have plots, but they have basically not been able to turn those into cash very fast. So I think this has given us all as Kenyans a lesson in terms of just having a very well-balanced portfolio. So what do we say? One of the key important things as we begin this process is basically, when you do invest in real estate, always begin with an end in mind. What are the objectives? What are your objectives are you seeking by investing in real estate? So that will help clarify in your mind how much you should put in real estate and when you should put it and what type of real estate you should put it. One of the things that we say, real estate is still a good investment, but use it as a diversifier for your investments. Let it not just be dominate your portfolio, so that you have a robust portfolio that can be able to withstand shocks like that we've had. In the last 1 year, people have lost jobs and all that, but they have assets which they are not able to turn into cash very fast. And in terms of real estate, is also having started from your end in mind. One is to then decide what type of real estate asset he wants based on the total portfolio that one has. One of the most popular investments that we have seen is these plots. Of course, they are more affordable than, say, you buying a house, and they are within easy reach of most of us, but they do not generate any income. And sometimes they are not also very easy to sell without one having actually discounting the price quite significantly. Now, having said that, one always needs to consider before investing what will be your likely exit plans within these investments. And like I said, having an end in mind will always be able to clarify to you the lead time in terms of what you require or how much time it will take you to liquidate that asset and how much it can contribute to your portfolio. I think I'll invite my colleague.
Thank you very much, Barrack and Sam. Today's a very interesting day because we are talking about an asset class that does not need any introduction. Each one of us has interacted with real estate. We are living in houses. As my colleague has mentioned about COVID, one of the key takeaways I've had from COVID is that we all have to live somewhere. We were all told to go and stay at home, and each one of us had to comply and stay at home. So I think that has been a very, very intimate interaction with real estate. So my job is to really just take you through the avenues of how do you then get invested in real estate. Barrack has done a good job of introducing the asset class, what we need to consider, what are the things we need to look out for. So I'll just be drilling down into those details. And I want to start by giving you a Hebrew proverb. It says that he is not a full man, he who does not own a piece of land. I would request to be allowed to just slightly modify that and say he or she is not a full man, stroke woman, he or she who does not own a piece of land. And I hope that by the end of this webinar, we'll be able to either have justified that statement or we will have nullified. You remember our hypothesis testing used to say, you can either accept or reject the null hypothesis. So that is our hypothesis for the next session of the webinar. So I want to just go quickly into then, with this real estate, we've talked about what it is, the things that we look out for. So then how then do we own this real estate? And there are only two ways of owning real estate, really broadly speaking. One is you can directly own it, which means Ruth, I buy a plot of land in Kitengela, or I buy a piece of an apartment in Nairobi, and I get my title, and the title is my name. Ruth Okal is either the leaseholder or the freeholder of this land or this apartment, and it is mine. Alternatively, you can also own it through what we call indirect ownership, whereby I can invest in a company that owns real estate. In that case, I don't have the title to my name, but I own a piece of it, or I can invest in a real estate investment trust, which basically owns the portfolio or the real estate on my behalf. I own a piece of it, but I don't get a title to my name. Other ways is you can either directly or indirectly, you can either own it through equity. Equity basically just means that I put in my money. I don't go to the bank or to the chama or to the SACCO to get a loan. So I buy land, a plot in Kitengela again at 1 million. I have my 1 million that I've been saving. I go and put it in the land, and I don't ask any money from the bank. But we can also own it through mortgage, in which case you go to the bank, get some money. You also have to put in some deposit, and you own the property, you pay down the loan, and eventually it's transferred to you. So I'll just be drilling down into this as well. So in terms of what happens when you own it publicly or directly. So direct ownership is really what I've talked about. You have the title to your name, and the title, of course, spells to you what you can or cannot do with the land. In public real estate, obviously, you own it through an investment trust or a company that is publicly listed. So what it basically means is then you are able to trade off real estate as though you can trade in shares, for example. So I'm able to buy maybe shares in a company that owns real estate. I think in Kenya, we are familiar with companies like Home Africa, or you're able to trade in a real estate investment trust. Don't worry, I'll be giving you more color around this as the presentation goes on. But basically, you own the real estate, but not directly. You're able to trade in and out. I can buy more shares today. I can sell others tomorrow. Maybe I need to pay school fees, as Barrack just mentioned earlier there, that some of the reasons we own real estate is we need the cash flow to be able to meet our immediate needs. So I want to pay school fees. I sell the units or the shares that I own in a company that trades in real estate, and I'm able to get my school fees. So moving on to just direct ownership, just giving more color on that. And we are saying that buying land is an option. I know all of us are familiar with buying land. Either you've interacted with it, or either you know someone who has interacted with it. And at this point, I think the best saying I've come across is that fortunes have been made out of owning land. And I want to agree with that. But again, I want to put a caution that yes, if fortunes can be made out of owning land, but of course you have to do it within reason. So the saying goes again, we keep saying that when you're buying land, what is that I should consider when I'm buying land? I should be looking at the location, of course, but look at the location and look at the value. Look at what is it that you want this land to do for you. And we are saying that, yes, you can decide, I want to buy this land, keep it, I hold it for maybe some years and sell. I want to give you an example. As a fresh graduate out of college, I joined a company in Kenya, and we had a SACCO and they were selling land. It was 90,000 shillings then. Of course, it was a lot of money because I was just fresh from college. I didn't have, my salary wasn't that much. But I can tell you, I bought that land. I kind of paid down the loan, forgot about it. And the next time I asked the valuer, he told me it is now worth 500,000. And I was very happy. It was, like one of those moments where you say, this has been my saving, and I can see the land, I can touch it, and I can also sell it for much more. It's gone down up in investment, we say 5 times. So it is a good avenue, but the goal of the investment has to be very clear. You can also buy land, develop for your own use. I know a lot of people are moving out of town because of the congestion, and you're going out and you're buying land and you want to use it for your own residential use or any other use. You can develop land for rental, as Barrack mentioned, and you can also develop to sell. So then why location? Why would I bother about location? Because Barrack said land is fixed, it never moves. Not any land is the same as the next plot. So why location? So location is very, very important in the sense that when you're buying the land, you already have the end in mind. I want to buy this land to build on it, or I want to buy it, keep it, and sell it later. Then the location is important because that determines what are the regulations, what can I do with that land. You buy agricultural land, and then you're told you cannot subdivide it into plots, into eighths and quarters, and sell it because it's agricultural land. So it's very important that you understand the location and the regulations that come with it. Maybe I want to buy land to live on it, but I have children. My children need to go to school. My children need to probably interact, have social amenities. So that location is very important because am I having proximity to what I need to interact with on a daily basis? And also budget. You can have the same land in Upper Hill, for example. You'll be told an acre. I've had figures of, 1 billion shillings, 800 million shillings an acre. But you can also have an acre of land in probably Kilimani at 300, 350 million shillings. But you can also have an acre of land in Kitengela, which is costing you much less than that. So location then will also determine what it is that you can do with the budget that you have. So it's very, very important to look at the location, and also very important to look at the value that that location is able to give you as you continue the investment journey. Sorry about that. Okay, so this next slide is just giving you more color around if I buy to sell, what should I look at? The key takeaway from here is really 2 things. Number 1, do your due diligence. It is so important that I don't think I can overemphasize on that. Do your due diligence. Check how is the title. Is it on any grabbed land, riparian land? Riparian just means it's land that is around maybe wet areas or rivers or just water bodies. Does it have double allocation? Maybe has someone else bought this land before, so that we're going to start fighting later on? Is this land what is said to be? Like if it's 1 acre, is it really 1 acre on the ground? And has someone encroached on it? Is it a quarry? For example, I've seen cases where Kenyans are saying, I bought land, I didn't visit the property because I trusted the seller. And then you go and find it's a quarry, or maybe it does not even exist on the ground. So it is so important to do your due diligence, whichever real estate you're investing in. Make sure you see the property, make sure you do your due diligence. And if you're not able to do it, maybe because you're not capable, you're not professionally, because we can't all be professionals on all the fields, then ensure that you use professionals who are registered, who are regulated, who are able to give you, the best advice before you put your money in that land. So whether it's for buying to sell, buying to develop, buying to hold, have your due diligence done. And the most important people here I can say is a land surveyor who will tell you, confirm for you the boundaries, check for you the size, check for you that land is the integrity of that parcel, and also have your valuer look at it. What is the price that are being asked for really the market value or the market price, or is it, am I being duped? And then you'll have maybe other professionals like, planners who can tell you, is the road going to pass here in the next maybe 2, 3, 4, 5 years, so that you don't end up buying land and you find maybe there's already notice that had been given that a road is going to pass there, and you end up buying this land and you have now struggled with the government for compensation. and there are certain things that cannot be done when, you know, such notices have been given. So it's very important that you get people who are in the field, who do, this is their job every day, to ensure that they handhold you and that your investment is safe. So again, when you go to development, obviously, when you want to develop to rent or to sell, look at that land or that asset that you're buying and ensure that it's marketable. Because when you're developing to rent or developing to sell, you are targeting a market, and the market is not necessarily yourself. Whatever the market needs might not necessarily be what your preferences are as a person. So there's a difference between when you're buying land to develop for rental and you're buying land to develop for your own use, because your preferences and the market preferences can be totally different. So here is where you need to carry out a market study. You need to ensure that this property that I'm putting up, there's demand for it. And the demand is adequate, that I'll be able to offload it in the market. I'll be able to sell it. I'll be able to achieve the rentals that I'm looking at, and I'll be able to make money out of it. And then you're also comparing that with your cost, because no one does anything for nothing. If you're investing in real estate, Barrack has told us about the risks, some of the risks that there are, and that risk needs to be compensated. You're putting in an upfront amount of money, and that money needs to be returned back to you with some interest or with some return. And therefore, it's very important that you do your feasibility study and ensure that you have enough buffer to be able to carry out the development, to be able to sell it or to rent it and make money out of it. So here is where now you add more professionals as well. You'll have to have maybe a QS, a quantity surveyor that will come in, tell you the cost of what it is that you want to build. And then you'll have your realtor who'll come in and tell you the marketability of it. What are people looking for? Are they looking for 2-bedroom apartments? Are they looking for studios? Are they looking for standalone houses? What are the sizes? Are they looking for a 3-bedroom house, which is 60 square meters, or a 3-bedroom house, which is 2,000 square feet or 200 square meters? So all those parameters have to be known upfront, because they affect your cost and they also affect your marketability and eventually affect your return. So it's very, very important that we do our due diligence, we do our market studies, we do our feasibilities, and that we are very sure that the venture we are getting into is what we really want to undertake. We are able to take the risk and we are able to wait for the returns. Again, I keep saying that fortunes have been made out of owning land. So it is a good investment, but you really just have to have a bit of more thought process to it. We can't talk about real estate without talking about affordable housing. It's one of the trending topics, I think, worldwide now. Everyone's talking about affordable housing, and mostly in Africa, affordable housing. And I think I've seen a question somewhere asking, how do I start my journey? I think this is one of the avenues. There are still many avenues we're going to talk about in the presentation. But affordable housing is really something that is just talking about bringing in decent, habitable housing to take care of, the bottom, or rather the lower portion of our population who happen to be the most, and to give them have decent and, a decent living. So it's not necessarily meaning that affordable housing is poor housing. That is not what it means. It is just a good habitable housing that is decent and that also gives you dignity as an investor or as an occupier. So far we have a target of building at least 500,000 affordable housing. And I know it's been a long journey, as real estate takes long to actually, execute, or rather to develop. But these are some of the units that have been here, and it is now something that's becoming a reality. And I think it's a good way to start, one of the good ways to start your investment in real estate if you have the money. And the process is very simple. You register under Boma Yangu, you do your contributions, and then you get a location. So I wouldn't talk too much about it. I'd put it here just to give you a live avenue that is happening currently in Kenya. And it's not only in Nairobi. You can see we have houses lined up in Machakos, Kisumu, Mavoko, Nairobi, Mombasa. So it is across the country. And it's one of the ways maybe you can investigate and start your home ownership journey or real estate investment journey. Of course, there's question about how do I afford these houses? Because some of them are like 1.5, 2.5, 3 million, 4 million, and not all of us have that money saved in our bank accounts. So you might need to borrow. So there is affordable housing loans that are currently being extended by a Kenya Mortgage Refinancing Company. That's an opportunity to explore. I have also put in the retirement benefits loans amendment regulations, which allows us, those of us who are in formal retirement benefits schemes, to be able to access part of our savings. I think this was really a good step to access part of your savings, either 40% of your savings or 7 million, whichever is higher, and you're able to access that money and use it to buy a house in an eligible, scheme. So this is a bit of restriction, which is understandable, but I think it's also a very good avenue so that you're able to start your home ownership journey or real estate ownership journey. So then, having talked about this direct ownership, how you can buy your land and build, or buy your land and wait out and sell it when the value goes up, or buy your land, build and rent or sell. Now we go into another interesting ownership avenue, which is called now indirect ownership. This is where you get access to a diversified portfolio of real estate by investing in either a company or an entity that invests in real estate. So you're not able to have the title in your name. You'll probably not be able to say apartment number A5 is mine, but we own it collectively. So we all bring our money. It's like it's a collective investment scheme sort of. So you bring in your money together, and this money is then handed over to a fund manager or to a team of management who then invest that money in real estate. So you have your share, but you don't have a title that reads Ruth Okal as the owner of this property. But Ruth then has a way of accessing a diversified portfolio, as opposed to just owning maybe one apartment. Then Ruth is able to own a piece of a diversified portfolio of real estate. So just going into it, one of the globally recognized options of indirect ownership of real estate is what we call real estate investment trust. This is a very interesting topic. It is interesting because it is an ownership structure that has been in existence since the 1960s, starting in the US, and it has done quite well in the developed markets, in the sense that it has historically given, or rather delivered, competitive risk-adjusted returns as compared to other asset classes. And this ownership structure really has very many advantages that we can take advantage of as investors in real estate. It is also a way of starting your journey when you're maybe fresh from school or fresh from college, it's your first job, your salary is still, you're still busy looking out for your basic, basic needs. It is very easy to start investing in real estate through a Reit or through a property investment company. Of course, be very careful to look at who the counterparties are. Be very careful to do your due diligence and ensure that the counterparty is the one that you want to deal with. So what are Reits? So Reits are really just a tax advantaged entity. So I know we use big words sometimes as investment managers, so I'll try and break it down to very simple English. You know, the ideas are big, but I'll try and make it very simple English. So when you talk about tax advantaged entity, it just basically means that Reits are tax exempt. And that means that if you invest in a Reit, the properties that the Reit invests in, let's say they're buying income producing properties, they're buying a block of apartments, or they're buying an office block, or a retail center, or a student housing, whichever subsector the Reit invests in, it means that when you're buying the property, for example, into the Reit, you will not pay VAT, for example. So the 16% on the value of the property is saved, and that savings is passed on to you, the investor. Number two, there's no stamp duty, so that is also saved. There's no capital gains tax. There is no corporate tax, which is currently, I think, 25%. So there's a lot of tax savings that the Reit regulations then accord to the Reit structure. And therefore, those savings are then passed on to you as an investor. Obviously, as we go along with the presentation, when you get to distribution, because the Reit then distributes to you the income that it gets, then if you are an investor in the REIT and you are taxable, then you'll be taxed a one-off tax of, just the same way you get taxed when you're getting your dividends from, shares or dividends from any other, listed entity. So I said that they typically operate real estate, to a limited extent develop, but this is the global picture. In the Kenyan picture, we have REITs that can do development only, and they're called development REITs. And that is a very unique REIT proposition that is only found in Kenya, in the whole world. So again, as Kenyans, we can be happy and clap for ourselves that we have our first one for us. But typically in the global arena, REITs normally operate income producing real estate. And the reason for this is because REITs are required to distribute most of their income back to the unit holders. At least 80% is required to be distributed annually. So therefore, it makes sense that they typically invest and operate income producing real estate. They collect the rent, they remove the expenses, and give you back what is left out of it, what we call distributable income. So let's talk about advantages of REIT. Liquidity. So Barrack said he comes out of school, he buys his plot of land. Of course, it's appreciating in value. He's very happy every year that the valuer tells him it's gone up 3%, 2%, 5%. But then comes a time when Barrack needs to go to school, and he needs school fees, and he's not able to sell the land quickly within maybe a month or 2 weeks or a week. So this is where liquidity is very important, because if Barrack was owning REITs or other shares or units in a REIT or shares in a listed real estate company, then Barrack would be able to go to the broker and tell the broker, sell X amount of units or X amount of shares for me. I need the money. And in 3 days to 4 days, Barrack will have his money, and Barrack will pay school fees and go to school or for his child. So liquidity here means also, if we were to sell an eighth of land that Barrack has in Kitengela, and Barrack, allow me to be using you as an example today, I think, because you introduced the topic of plots. So then he's not able to go and say, let's sell this corner, let's cut a corner and sell, because that's enough to pay school fees for the year, and I will remain with this other corner. Probably he will have to sell the whole eighth, because he's not allowed to subdivide it further. But if it's a REIT and Barrack owned 1 million shares or units, then he's able to sell 100,000, or he's able to sell 200,000 and still remain with 800,000. Then tomorrow he gets a bit of a windfall from somewhere. He goes and buys another 200,000. So you see, that is really a great attribute of REIT, because it gives you the liquidity. You're able to trade in and out as your needs require. When you talk about lower investment requirement, at the beginning of this, when I gave you the Hebrew proverb, I said that you could have 100 million shillings, or you could have 200 million shillings, whichever amount of money you have, or you could even have 1 million, or you could even have 50,000. Your money is able to buy you land or a property, but it depends on the location. Now, when you come to the listed, REITs, for example, you are able, there's no restriction, especially if it's an income REIT in Kenya. There's no restriction. If I have 1,000 shillings, I can walk to my broker and I can say, buy me 100 units of this REIT. And your broker will be able to do that, because all you need to observe is that if it's a listed entity, the Nairobi Security Exchange requires you to buy at least 100 units or 100 shares. So you go to to the listing or to your newspaper, and you see the price. If the price, for example, is 7 bob, if I use Ferrari, and then you just multiply that by 100, put in some small amount of money for brokerage fees, and you're good. So the investment requirement is so low such that it is available for all of us. If I was to use big English, we call it democratizes ownership of property. So none of us has a reason not to be able to have access to ownership of real estate, because it has been, the minimum requirement has been reduced, if not removed. So that's another very good advantage of REITs. The other one is access to quality or superior properties. So for example, if I wanted to buy a shopping mall, maybe it's a dream. I know my dreams are valid, but I might never be able to afford to buy a shopping mall in Kenya or in Nairobi. But if I was to invest in a REIT or a property company, then I'm able to have access and at least own a piece of a big shopping mall, own a piece of a big office block, own a piece of a big student housing, because then I have been able to put in a small amount of money and combine it with other unit holders or other investors of like mind, and we are able to get access to those properties. But on my own, I might never be able to buy that, or I might only be able to buy one property, and that will be the biggest investment in my life. So again, access to superior quality and diversified portfolio is a good advantage of REIT. We talked about professional management. In the introductory part, Barrack talked about properties usually require operational management. Whether it's a plot or whether it's a busy property like a hotel, there's some level of management that's required. Now for a REIT, you get someone who's called a REIT manager, and the REIT manager works with a whole lot of professionals that also have expertise in different parts of real estate and fund management. So you'll have a property manager there, you'll have your leasing manager, you'll have project managers, development managers, you have engineers, and you have all these people, professionals, working to make sure that your property, or rather your REIT and the properties that it's invested in, are taken care of to the best, to the best interest of you, the investor. So it gives you the peace of mind. You don't have to worry about my tenant in Doni has not paid rent, and I keep calling them and they're not picking their phones. You don't have to worry about the tenant left at night, or the tap pipe burst at night. You're being called at midnight to go in and sort it out. So it gives you peace of mind, and what we call it gives you the bandwidth to be able to do what you do best, which is investment. And then you let the professionals do what they do best, which is managing that portfolio. I've talked about diversification, and I want to spend maybe a minute or so on earnings predictability. Because REITs usually invest in income producing assets, these assets have leases, and these leases, according to our law, Kenyan law, which is the Landlord and Tenant Act, is very clear that those leases have to be commercial leases, and they have to be long-term commercial leases. They have to be reduced in writing. They must be registered. There's a whole lot of the specifics that the leases have to meet. So as an investor, then you're able to know exactly who are the tenants that are in the property I'm investing in, what rent are they paying, how long are the leases, usually they're more than 5 years, what escalations are there, is it able to protect me from inflation? It has to at least be able to. And then you're able to predict. You can even also see the expenses because you have access to the audited accounts every year. So you're able to predict your earning capability. And the beauty with the REIT is that the earnings are not only regulated. So for example, our REIT regulations are very clear that an income REIT has to pay at least 80% of the net distributable income to the investors every year without fail. So there's high payout ratio. And then number two, because you have these leases that underpin the properties, you're able to predict what are these earnings. Are they growing? Are they sustainable? Are they, for how long are we able to earn this, get these earnings? So we normally say that REITs give, competitive, high and steady, growing, income. So that is one of the things that you will know. Even if you don't sell your units, you just hold on to them, but you know for sure every year, if it's an income REIT, I am going to be getting my dividends, and those dividends cannot be less than 80% of net distributable income. So you're sure of that, and that is by law. So again, we can't all talk about all the good things and not tell you about the bad things. As we said, property is very good. You will be able to make your money, but you have to be able to be careful about one or two things. So I will take you also through the disadvantages of it. So number one is control. I know we like control, and one of the motivators of investing in real estate, obviously, there is making money part of it, but also feels very good to say, I own that block, that office block on Wayaki belongs to so and so. And I think this is also very true for our corporate investors, where you have corporate headquarters branded, it says, let's use my company because I hope I have been allowed by my CEO to say this is ICA Land Center, and it looks really nice. So if you invest in a REIT, obviously you lose that control, because as I said, the property is co-owned by many people, by many investors of like mind. So you don't have that control. So you can't come and say, for example, you know, in this small, this ground floor unit, unit number G10 is mine. It is not, you can't have that divisibility. So you'll be able to lose control of it. Obviously, there's someone called a trustee and someone called a Reit manager who'll be making decisions on a day-to-day on your behalf, because they have a fiduciary duty to ensure that they act in the best interest of your interest. But that is one thing to note. The other thing is, of course, costs. As usual, all these people that are working on a Reit have to be paid. So some of the money will have to go towards paying the Reit manager, trustee, and that adds a layer of cost. Of course, there's also the savings from taxes, but at some point that of course is netted. I hope I'm still audible. Sam, can you hear me? I'm being told that my network is not very stable. Sam, can you hear me?
Yes, Ruth. Yes, we can still hear you loud
Okay.
and clear. Yeah.
Very good. Thank you very much for the confirmation. Yes, so I was on the disadvantages. Of course, the other thing is stock market. As I mentioned, that REITs are usually listed in the stock market, and therefore they trade, and the price is determined by what is happening in the economy, what is happening in the stock market, what's happening in the property sector. We've just gone through, or we are still going through a period of a pandemic called COVID-19, and you've seen what has happened in some of the property sectors. You've seen some like hospitality, which have really, really been beaten. We've also seen some like what we call maybe light industrial, warehousing, that have also been doing quite well. And so whatever happens in the economy then trickles down into the share price or to the unit price. And that then of course causes that volatility. Towards the end of this presentation, you will be able to see some of that volatility, trickling into the pricing of the units. But again, remember, your dividend has to be paid every year without fail. Then I said relatively moderate income potential. And sometimes it's because you have to keep giving out the money, so you don't have a lot of time to, a lot of money to reinvest. So because you're paying out, the payout ratio is quite high, at least 80%, sometimes it goes to 90%, even 100%. So it means all the money that I make for you as a Reit manager, I give it back to you, I put it back in your pocket. And therefore you want to expand, then I might have to come and have a discussion with you as an investor and say, we found this brilliant property, we want to buy it, this is how it's going to make you more money, but can I have some money to put in? So that is one of the issues also that you have to be aware of. Again, I think I would have to say here that real estate investment, and I think Barrack mentioned this also earlier, that it is for long term. So it's not for going in and coming out in 3 months or 6 months. It's for going in, being patient with your money, and probably have at least beyond 3-year horizon, and then you'll be able to make money. But if you go in and go out quickly, sometimes you might not be able to make money, because sometimes you might even come out at a lower price than you went in. So again, the question I get asked a lot is, how do I invest in these REITs? So we know the advantages, it's a good thing. We've seen it's worked in the developed world, it's worked in America, it's working in South Africa quite well. How do we invest in this? And I'll put here just some very simple steps of how to invest in a REIT. Of course, because the REITs that we have currently in Kenya are listed, you need to have what is called a CDS account, a central depository account, which any of stockbroker can open for you. Again, go for the brokers that are licensed. If you go to NSC or you go to CMA website, you'll be able to find a list of licensed brokers. Always deal with professionals that are licensed and regulated, because then you have a recourse in case of anything. Then you can visit this website that we put here. It will give you the prices of the REITs, and then you can be able to determine which REIT do I want to invest in. Currently, we have 3 REITs in Kenya. Which one do I want to invest in? And then you choose what you want to invest in. Then the third one is, I said, minimum number of units you can buy is 100 units. So if a REIT is trading at 10 bob, for example, then you just multiply 10 times 100. If it's trading at 20 bob, just 10 times 20 bob. Provide some money for brokerage services. Because number 4, because you decide how much money you want to put in. I'm a student, I have some 2,000 or 3,000 or 5,000 that I want to put in. I go and buy my REIT for 3,000. Next month, I get another 2,000, I do that. I'm a maybe a more established person, I have 50,000, any amount of money will go as long as the minimum is 100 units. Then, of course, I mentioned the transaction cost is about 2.1% of the investment value. So you have to give that provision for transaction costs. Again, you can see that the cost for Reit transaction is quite low. And then you deposit your money with your stockbroker's bank account and let the stockbroker do the rest for you, and you just see your account credited. So it's a very simple 1, 2, 3, 4, 5, 6 step, and you're already an investor in the Reit. If you want to sell again, go back to your stockbroker, issue the instruction, they will be able to sell the units for you and transfer the money to your account. So very simple. So we come to a conclusion, and we say that, let me just get to the conclusion slide. Sorry about that. Okay. All right, so we come to our conclusion now, and I promise that before I conclude, I'll be giving you some maybe nuggets about how Reits have performed outside of Kenya. I know Kenya is still very young. The first Reit is about 6 years old. The second and third Reit, this is their first year of operation. So it's still a fairly young subsector in Kenya, but it is growing. It's been crawling. I think it's now time to take up. But just to give you color around what is happening or what has happened in the other parts of the world. So we have things like we say potential for competitive long-term total returns. Again, I need to mention that when we compare returns, it's important we compare returns on a total return basis. Total return just means that you have the income return, which comes from maybe your rental income or your other income. And then you have the price return, which comes from your capital appreciation. So if you're invested in direct property, for example, I gave you my example of my 90,000 plot, and then it became 500. So your capital return is just the difference of what you put in and how much the valuation is. If you invest in a Reit and say you went in the Reit was 5 shillings at the beginning of the year, and now it's 7 shillings, again, your capital return is 2 shillings, which is the movement between 5 and 7 shillings. Then, of course, your income return is now the dividend that you get. So I said that if you look at Reit's website, I think even today, they're saying that Reits have performed quite well. And so far, they've total returns about 1.05%, because that sounds low if you're looking at it from a Kenyan perspective in real estate. But in the developed world, of course, the returns are not as aggressive as they are in developing world like Kenya. Then talk about likelihood that there are diversification benefits that may arise. Obviously, property has a very low correlation with other asset classes. So therefore, that is how the diversification comes up. So when the other asset classes are probably able to react quickly to changes, property reacts a bit slowly, and therefore it gives you that support or the benefits of the diversification, because we say the same our listed cent and above. If you're talking about Kenya shilling, if you're talking about USD, you'll probably be talking about 3% per annum. And that has been able to be inflation beating. And here, being very careful that talk about core inflation. Not that your money is not being eroded. And then you have to have potential to build value. So I put this, this small chart over here. I wanted to just demonstrate to you over time how Reits have been performing, and also to demonstrate to you that the income return is always positive. No matter what happens in the year, it has always been positive, as you can see this income. This is the return, the global, and this is the Middle East. So you can see income return. This is your dividends that you get every year. But price gets affected sometimes by whatever is happening in the economy. Look at 2020. I think the whole world was thrown into a situation by the pandemic, and you can see that the price return obviously was negative, and obviously now that affects the total return, because total return, as I mentioned, you add the price return plus the price return plus your income return, that gives you a total return. You can see also 2018, again, there was an issue, the financial issue, and that also affected the price. I think the same is repeated in Middle East. And again, it's just really that you have to look at it from a total return perspective for you to be able to compare. At this point, probably would like to pause and give it back to the moderator.
Right. Thank you. Thank you very much, Ruth. Towards the tail end, a few, we had a few pockets of places where we couldn't hear you, but at least we got the gist of what you were talking about. The poll results are out, and I will perhaps take it back to you, Ruth. Just have a look at the answers that we got for the poll results, and if you'd like to comment on them, let us hear.
Wow, thank you, Sam. These answers are very interesting, and I want to take these answers with my last slide because they're quite interesting. I think the first one, it says, have you invested in real estate? And we have 82% saying yes. So that is very good because it then underpins my introductory statement that we do not need to introduce real estate. Most of us have. And we have 18% who are not yet, of course, there could be different reasons why someone has not yet invested. Either they are still saving towards that investment, or either they are still investing in other asset classes, which is very much understandable. And allow me to take that and just come to my last slide over here, which I believe is visible to everyone. And we say that real estate, of course, is subject to variability on national and global economic conditions. I think we hammered that point very well. We've also hammered the point about real estate being, requires ability to select, to fund, to manage, and to change with changes in government regulation. And that is a key takeaway. So you always have to be very, very sure that you're handling your rentals and listing of the property properly, you're getting the right tenants, you're getting the right contract in place, and that you're also managing your expenses because that eat into your return, and maintain your properties to maintain their value. If a property is well maintained, they're able to, economic life is able to be extended, and you're able to even get more return out of it. And then, of course, look at the regulations and always look at financing. The next question I see on my screen is what kind of real estate you invested in, and I saw it's a plot. And this was Barrack. I think Barrack, you're right, that all of us have interacted with the plot. So it's very interesting. And I see block of flats and office buildings and shopping malls have almost combined 8%. And this is where now the Reits come in. And this is where, property companies come in, because as I mentioned, that these require a lot of initial investment, large amounts of money, which many of us are not able to afford directly. And therefore, this is how now you get into your REIT or you get into your property company. And we are not saying that have your apartment, still have your house, but now to get access to this other bigger diversified portfolio, then you can be able to minimize your risk, and you can be able to, increase your access through a listed entity or through a REIT. And this will still give you the cash flow that we talked about. As we said, that your dividend is assured every year without fail. You have tax advantages that are accruing to you and that are passed on to you, and that you also have liquidity. So when your plot is still taking time to sell, if maybe you want to sell, then you're able to quickly sell your REIT and get your money and do, take care of your immediate needs. So I think this poll is very good, as it was expected, and it underpins really what we've been talking about in the last 1 hour or so. So thank you very much, Sam, and I want to then hand it back to you.
All right, thank you. Thank you, Ruth, for taking us through the polls, and even for that very insightful presentation. Of course, even Barrack, yours was also quite insightful and combined. I think we are learning something. And because we are learning something, and we are always very excited about sharing this information, remember, for those who are active in social media, our handle is hashtag financial literacy KE. Let us get into those spaces and let's talk about this and let's shout about this. Great. Now we are coming to another session for question and answer. And I can see quite a lot of questions have come through. If you allow me, I would like to sample a few, which we will have them answered in this particular session. There is still all other questions that have already been answered. For those who have been following up on the chats, you will notice that quite a number of questions have already been answered there. That notwithstanding, if you are keenly listening to the presentations and you couldn't multitask, listen and at the same time read the chats and the questions and the answers. We will be posting all those questions and the answers back to your email. We will send them to your email and you'll have an opportunity to go through them. Now, in the interest of time, as we draw nearer, we will just have a look at just a few questions. Give me a minute. I would like to bring them up and so that we can just sample a few. Let's see. So the first question that came through, this is by an anonymous participant. There are pieces of land sold by the community under settlement schemes. The titles take time to process by buyers, relying on the settlement committees. How can one process a single title? How does one go about it? Ruth, would you like to take this question?
Okay, thank you very much, Sam. And I'm not sure I got the name. I think you said it's anonymous.
Yes, it was an anonymous participant.
Yes, so I think I might not be very capable to give you a proper answer, but I think title processing has been a problem in this country for quite a while. And there's been a lot of processing towards, digitizing land records and all that. Maybe if we can get the anonymous contact, I can be able to check with, a few contacts at the registry and probably be able to get them in touch or get a proper answer for that, because we also need to get to know the specifics of this land, where is it located, which settlement scheme and all that. So it's really not easy to give a global answer for that. We need to understand the specifics.
All right. Yes. Yeah, because different schemes operate differently, and yeah, it would be good to look at each of them more closely. But even just to open up that particular question to a bit more, because others may probably be interested in buying land, and what are the steps or what are the processes one can go can take to ensure that they get a title in their name for any particular piece of land that they are looking to buy. And one of the things, there are 5 simple steps that one has to really look out for and carry out is that you carry out a search. That's the first thing of the title at the land registry in your country. After the land search at the registry, prepare a letter of intent to purchase with the help of a lawyer, of course. Then go ahead and purchase the land, assuming all things check out. Then pay for the land rates and stamp duty to the relevant county. And of course, register the land bought with the help of your lawyer. Those are the things that perhaps you may want to make sure that you're able to do. And if you can do those ones, of course, at the very end of it all, you will have a title in your name. We will go to another question. What is the difference in annual returns one expects between investing in a Reit and money market? Which one would you advise for a middle-aged person interested in investing for future? This is a question that was posted by Mercy Omolo. Thank you, Mercy, for that question. Barrack, would you like to take up this?
Well, I was just trying to decipher middle-aged, but I will say I'll give it a good guess of maybe 35 to 45 years, just to give it a good number. And if I'm correct in that range of age, I will say again, depending on circumstance, we use a rule of thumb, but for that particular age, I will say you'll be more invested in a little bit of risky assets than a money market fund. Yes, you need to have a money market fund. Obviously, we talked about having a very well balanced portfolio. But at a middle age, that if my definition is correct, then you can afford to take a little bit more risk because you have more years to work, you have more years to earn, you have more years for that investment to recover in case of cyclicality. We say property has its own cycles, and real estate investment trust basically invests in real estate at the end of the day. So I will say that subject to your personal circumstances and cash requirements, I will say I'll put emphasis on a Reit, but also not forget that I always need cash to basically assist me in paying urgent items, or basically just my normal operational needs.
All right, thank you, Barrack. Anne Kasili, you asked a question: can one have more than one Reit account or the Reits account? And how do we know where you have invested? Those are two questions in one. Ruth, take up that one.
Okay, thank you, Sam. Thank you, Anne. Yes, you can invest in more than one Reit. The only account you'll use is the CDSC account, but you can invest in more than one Reit. How do you know which properties we have invested in? Is the Reits are required by law to give you two reports, at least two reports in a year. There's half-year report and annual report. In those reports, one of the disclosures is which properties are invested in, what are the tenancies in those properties, what are the rates. So there's a lot of disclosure that you find in those reports. Secondly, if you're an investor in a Reit, the law allows you to walk into the Reit manager's office any day, any working day between working hours, and ask to inspect documents, any documents from valuation reports to leases, to prospectus, to audit reports. So you are allowed to walk into the Reit manager's office and ask for those. I know we've had COVID, and probably walking into offices has been a challenge, but if you get in touch with your Reit manager and ask specific questions, then the Reit manager will be able to respond to you with the specific answers, or even sending you documents that you require. But the annual reports are very detailed, and they give you all that information that you require. Back to you, Sam.
Thank you. And still, this one is for you, Ruth. Are Reits part of mutual funds?
Okay, it's an interesting one. Okay, yeah, I think we can call them mutual funds because basically it's just collective investment schemes. It's just like your money market fund or any other CIS. The only difference is that it invests predominantly on real estate. Yeah.
All right, thank you, Ruth. We'll come back to you. Let me ask this question. I will direct it to Barrack. This one relates to affordable housing, and the question is, can one buy these houses if not a civil servant?
Let me say it depends. It depends. There are a number of affordable housing schemes that have come, but Ruth can talk more about this. She knows a lot about this. But what I know is that there are a lot of affordable housing schemes that have come for those ones who are not civil servants necessarily. So yes, but Ruth can talk more about that.
Yeah, thanks, Barrack. You're right. Yes, affordable housing is open to everyone that falls within the eligibility criteria. I think the most important one being the earnings, or rather the income capacity. So it should be earning less than 150,000, but it's for everyone. There's also civil servant housing scheme that is different from affordable housing. So anyone is able to invest in affordable housing as long as you fall within that criteria of earning.
All right, thank you. Thank you, Ruth. And of course, if you're looking to get yourself enrolled in the affordable housing program that the government has rolled out, the first thing to do is to register yourself in the Boma Yangu platform. And once you're there, if you're eligible, definitely you'll book yourself a slot to finally own a home coming out of that particular project. Another question for Ruth. Someone has asked if you could repeat the tax exemptions for Reits.
Okay, thank you very much. So I'll just take the tax exemptions again. So Reits globally are tax transparent vehicles. That's what we call them. So basically, their taxes are exempt and the benefits are passed on to the unit holders. So if you come closer to Kenya, there are several taxes that apply to properties and entities. So the first one I would say is the corporate tax, which applies to obviously companies or other entities. So REITs are exempt from corporate tax. Then we have, when you're buying property, for example, you're buying a commercial property, there's a purchase or rather a VAT of currently 16%. So REITs are exempt from that as well. So when a REIT is buying property, then they don't have to pay the 16% upfront. They don't have to pay the 16% at all. And then of course we have Cgt Capital Gains Tax, which usually is paid by a buyer when the CGT that is paid by the seller when you're selling your property. So when a REIT is selling property, again, they don't pay capital gains tax, they are exempt. And then the other one is the stamp duty that we talked about. So again, that is also exempt. So there's a lot of tax exemptions that accrue to REITs in Kenya, and that are captured in the Income Tax Act of, I think the latest revision was 2021, yes.
All right. Okay, thank you. Thank you for that, Ruth. How can I get an already established estate into a REITs management? What are the charges I will incur?
Okay, that's mine as well.
Mm-hmm. Mm-hmm.
Okay, yes, so there are different ways of getting your established estate into a REIT. One, you can form a REIT yourself. You can be the promoter and then form the REIT, and then you can list the REIT. So like what I can say, if you look at Econ REIT, basically that's what has happened. They had a portfolio, which then they have formed the REIT and transferred into a REIT, either the income REIT. So if it's already established, obviously it will go into the income REIT. If it's a development plan or a development project, then it's easier to get that into a D REIT. Now, the other way is you can either flip then your property, which is already developed, into an existing REIT. For example, today, if Fahari, let's say, is looking for properties to buy and your property happens to meet the criteria, then you're able to then flip that property into Fahari. Either Fahari will pay you cash, cash, and that's the end of it. Or you can put the property into the Fahari, and instead of paying you cash, then Fahari gives you units in the REIT, so you become a unit holder, equivalent to the value of the property that you brought in, or you can be a part cash or part unit. So those are the two avenues that you're able to get your property into a REIT, either flip it into an existing REIT or to set up your own REIT from scratch.
All right, thank you. Barrack, this one you can answer. Kindly advise, is the CDS account I opened usable to not only in REITs, but also to other capital markets assets or investment options? This is a question on the CDSC account.
Yeah, sorry. Yeah, so basically, yes, you can use that CDSC account for other equity securities because the REITs are also listed on the Nairobi Stock Exchange. But obviously, as it is now, if you want to buy other securities like bonds, that is a slightly different arrangement, at least for now. And you need to open that through the central bank. But for equities, yes, the NSE will, all of them are actually listed on the NSE, so you can use it.
All right, and someone is curious, if I buy Reits through NSE and wait for dividends or distributions, how different are they then from other stocks in the market? Barrack, you
maybe.
Okay, Ruth, yeah, go ahead.
Let Ruth maybe take that.
Okay, let me take the first part, then Barrack, you can do the second part. So in terms of Reits, I think the only clarification that I can give is that Reits are mandated by law to pay dividends every year, at least 80% of the net distributable income. So that is the difference. I'm not sure if other companies have such regulation, but I can let Barrack chip in onto that.
Yeah. So other companies, certainly other companies don't have the same type of regulations, and like Reits, which are basically compelled to pay dividends of a certain amount. For them, it just depends on their dividend policy and what the directors feel is appropriate for them in that particular year. So that's the difference in that. But they are all of them are listed on the NSE. But the Reit, of course, the primary asset there is income producing real estate. So that is the underlying investment in that.
All right. And someone has also asked, on average, what is the rate of return from Reits? And also, do you have data to show comparative performance?
Okay, so I think I will go to the other slide I had. In Kenya, we don't have comparative data yet because, as I mentioned, the first Reit has been here for a while, but the other two have just come in. But maybe if you look at this, you can see these have been the average returns in the last how many years? These are 5 years, 5-year return. And the total returns have been in the range of from negative, the lowest was negative 9% in 2020, and the highest was 15% in 2017, sorry, 23% in 2019. So that gives you the average range. As I think what I mentioned is that the price return gets affected by the economic performance sometimes, but you can see not all the times. The price return can be negative, but not all the times, but the income return is always positive. So I think the easier one to compare is the income return, which you can see, and that's on a global level. So it has all the Reits that are listed within a Reit indices. So maybe we'll need to drill down into, maybe Africa to get that data for you. But I think what you're saying is conclusively that Reits have been able to provide competitive returns compared to other asset classes. We can't be able to compile that data, comparing the Reit returns and the other asset classes, and we can't be able to share that with our listeners. So I don't know if Barrack, you want to add something onto that?
Yeah, I mean, it's something that we can share with, we can share with we can be able to share that with the person who is interested.
All right, thank you. And allow me to just ask the last question. We are not doing so badly on time, but we still have another session to do right after this. And the last question, tenancy occupation in malls has been dipping. Is this a reflection of the state of the economy?
That's a very valid question. I'm not sure who has asked him. I'm not able to see the chat yet, but I think it's a very valid question. And they say that property usually is cyclical. So it follows some things in the macroeconomic sector. Things are political and all that. So yes, occupancy has been dipping for some malls. And why it has been dipping is one, there was an economic
Ruth, we are losing you.
We are rating for, you can't, I'm sorry, let me just try and get my volume up. Can you hear me now?
Yes.
I'm sorry about that. So let me just take that again. I'm saying that, yes, property reflects what is happening in the general economy, and also sometimes it reflects what is happening in the micro economy, like within that location. So yes, the economic performance has not been very strong in Kenya, I would say that. So that then translates into the spending power. And that means the spending power has also not been very strong. And retail, of course, depends on spending power. Secondly, there has been oversupply in the market. And I think this is something that has been talked about over and over for the last 5 or so years. So the oversupply, of course, means that most of the retailers are stretched thin, and therefore they are not able to take in more additional space. If you look at our malls, you'll see most probably there are some tenancies that you'll probably find them in most of the malls, and they're not able to expand as fast as the supply was coming in. Thirdly, we've had a big challenge with anchor tenant failures. I don't want to mention names here, but at least we've had at least 4 to 5 failures in the last 4 years or so. So that is like 1 failure per year. So that really, the anchor tenant is the engine that drives a mall. So if anchor tenants are failing, then it trickles into the other businesses because footfalls are affected, and therefore you have a situation where other retailers are not able to perform optimally. So it's a combination of factors. And having said that, it's very interesting that I always say that Kenyans, we believe that kuteseka ni kwa muda, because I've been driving around and I've seen a lot of malls still coming. I think in Kilimani alone, I've seen 2 malls within a space of less than 2 kilometers. Actually, 3 new malls within less than 2 kilometers. And there were 3 new malls that came up last year in the same vicinity. So I think there's that resilience that has also been built, that yes, there's going to be this period of a dip, and we will come out of it. And when we come out of it, let's do the development now, so that when the property market starts rising, then the properties will be ready and they'll be on the market at the right time. So again, timing is very important. And as they say that, they keep saying that tough times don't last, but tough people last. So I think it's just a matter of cyclicality. Whatever is happening in the economy then trickles down into the real estate, but it gets better over time. Back to you, Sami.
All right, thank you. Thank you, Ruth. We will close that part for questions now, and we will have now an opportunity to ask the participants the questions. So this is the time that I tell you to do this, and make sure that your fingers are going to be quick, because we will award the person who types on the chat. Please do not type on the question and answer tab. Please type on the chat tab the answers to these very simple questions, just to see if you have been following on this session this morning. And I'll go to the first question. I also want to ask that the tallying team also be quick in identifying the person who types first, so that we can announce the winner for this particular question. We have beautiful merchandise from ICA Lion Asset Management, which we will be sharing. And of course, we will get in touch with the person who is going to be the winner for today. But it's not just about winning, it's also about learning. So the first question goes, what does the acronym Reit stand for? Thank you, thank you. I can see quite a number of people have typed the correct answer, a few typos, but at the end of the day, you got it right. Thank you, we can stop there. And from the team, let me get the name of the person who typed the correct answer, and the correct answer is Real Estate Investment Trust. The first person to type the correct answer was Salma Kamala. I hope I have pronounced it correctly. Salma, we will get in touch with you. If you could check your private or your direct message, look on the charts and you will see the steps or the directions that you can take to make sure that you get the prize that you have won. Now, for those who missed out, this is your chance. Salma, you're still in this one too. You ready? Which type of Reit is unique to Kenya? In other words, only found in Kenyan market. Which type of Reit is unique to Kenya? Only found in the Kenyan market. Type of Reit. This question has had interesting responses. We can close it there and let us have the person with the correct answer, and the correct answer, the first correct answer is by Peter Dhumbuku.
Peter Dhumbuku, yes.
Peter Dhumbuku has the correct answer. It's a development Reit. That marks the end. Of course, Peter, look out for a direct message that will give you instructions on how to receive your prize. And we will definitely share that. And for the rest of us, it has been a wonderful morning, crossing over into the afternoon, where we have learned a lot. This doesn't mark the end of learning. We will definitely be engaging with you further. Look out for future webinars that are going to be posted, and we will have different topics which we can engage. And at the same time, feel free to engage with us at any time. For those who haven't set up a DigiTrust account, make sure that you do so. Go into our website. You will definitely be led to the right direction where you can set up an account. It would be good that I saw a question if there's an email which you can send. If you have other questions that come up anytime, please send the emails to Catherine. Please type the email address right now on the chat so that we can get the email address for that person who has a new question and they would like it answered. So kindly post it there. Also post the link for DigiTrust for those who would want to get into it right away. And we will definitely be on the right track. Now this marks the end. It is exactly 12:30. This is a good time. We had promised that we will keep this webinar for 1.5 hours. And I would like to thank everyone who has sat in. We have great numbers, 247 as at 12:30. At one point we were at 300. And we even got apologies have come through for people who had to drop off. And they say this was a fantastic session, and they would like to get the recordings. We will definitely be sending the recordings. When we began the session on the chat space, we have sent links to the YouTube links to the previous sessions we've had, session 1, session 2, and session 3. They have all been posted here. We will soon be posting now session 4. Of course, it has to go through some work just to make sure that it is compressed to the right size, so that at least you don't have to spend so much of your data bundles viewing it and have an enjoyable session. Go ahead, share those sessions with your friends, and let us continue engaging. From me and from my team, it is bye-bye. Enjoy your afternoon. We are coming on close to a very long weekend. Enjoy your weekend and see you next time.